she wants us to.
Oh, he wants us to. Oh, okay, okay.
Okay. Somebody gets a mic. No, no, as long as you got one chair.
Oh, I see what you're saying.
Okay. Yeah, so mics are numbered by where people think they're sitting.
Oh, okay.
Yeah. So this is mic number 5. 1, 2.
Yeah, I just like a company, just to make it a bit more. I just keep on slide, just as the company logo and.
Okay, that's easy. Yeah.
Because we may have confused things because evidently mics are numbered and they think they know who's got what mic and we just move mics around
I'll make sure.
so that way they won't have missing going.
Can we just write down the?
I have number 3.
Okay. So I have number 2.
And 1 is this.
Yeah.
It's always actually below ground uncertainty
Mr. Alexander, do you have mic number 4? Oh, and Barry has mic number 5 and.
one. That's just for free habits. But we have 5 minutes to
Here's your. Sorry. Here's your.
Well, I think both of them probably both of them.
Hello, everyone. Great to see you all here today for one of my favorite topics. We're here to talk about investment and risk for sustainable energy ventures. I'm Meredith Adler, and I'm the community manager at Student Energy. So we have 4 panelists here today. We have Edward Keurig, Alexander Wubowo, Chris Elmer, and Mary Gold. So I'll talk a little bit more about each one of them as we go. But before I get to the serious stuff, there's something to share with you. Can we cue the slide? All right, this is an article from The Onion, which is a satirical newspaper in the US. But it says, scientists politely remind the world that clean energy technology is ready to go whenever. So this is a little bit of a joke, but it gets at something to be serious. We have lots of we have different and researchers that we could be renewably powered whenever we want to be. Like Mark Jacobson at Stanford University has done an analysis project to say how each of the United States could be powered by renewable energy. to go. According to most international agencies, we do need to cut carbon and move to a mostly renewable system in order to have a sustainable energy future. And I really think that this panel gets at the heart of the question, because many people, when they're discussing different debates, are talking about investment. They're talking about the price for renewables, how renewable financing is different than financing fossil fuels, and also government will to do so when there are other cheap options around. So this is what our panelists are going to give us a little bit of an insight on. I would first like to introduce Mr. Edward Keurig. Oh, sorry, he's the managing director.
Investing technologies like wind, solar, and hydro. We do it here in Indonesia. In Indonesia, we have 3 wind projects being developed in South Asia as well as in West Timor. Solar in Philippines, we have wind in Thailand. Still the big influence of
Before our next speaker, you can tweet at us through the entire event with the hashtag ISIS2015 and hashtag UnderNerd. And we will be using Pigeonhole Live just like we did at the last session. So if you have questions, it's pigeonhole.at with the passcode ISIS2015. All right. Now I'd like to invite Mr. Alexander Wobodo to the stage. Mr. Alexander is the Vice Director of Institute of Technology and Science, Bandung, the same university that's helping us to host the summit. Mr. Alexander has a specialty in project finance law, including a PhD from the University of Berkeley, and he is the founder and principal for the WWS Law Office in Jakarta.
Okay. Thank you for the introduction. I'm very happy to see young people this morning in this room. You seem very tired, but also excited at the same time. So let me explain my background a little bit. That I'm a vice rector of ITSB, and also I worked with financial industry before, and also I'm also a legal scholar, and I help a lot with and startup companies involved in renewable energy and also traditional energy. So I can see that we know that energy investment is a unique investment because it requires intensive capital and also involves a lot of risk, but also it doesn't mean that there's no way that young people can be an entrepreneur and make a startup and then mitigate all the risks, manage all the risks to promote the renewable energy. So I hope from this conversation, from this discussion that we can also encourage young people to be involved after your graduation, to be involved, start being a pioneer and create, being innovative in energy technology and create a startup. Thank you.
Thank you. The next panelist I would like to introduce is Barry Goldstein. Barry is the Executive Director, Energy Resources, Department of State, and Government of South Australia. Barry has more than 30 years of international experience in the energy business, and his main focus throughout his career has been in the oil and gas sector.
Yeah, so I spent 25 plus years working for oil and gas companies, been a regulator for 12, I represent Australia at the International Energy Agency for Geothermal. I just finished up being the chair of the World Geothermal Congress. Listen, I've got the dilemma that my job is to simultaneously meet the expectations of investors and the community. And those expectations collide when people say that they want safe, healthy, secure, and competitively priced energy. And when you talk about trying to meet all of those targets simultaneously, you're going to actually do it all for two things: comparative advantage and market intervention. While certain forms of energy are not priced yet price competitive with each other, though their carbon intensity may be such that the community demands that you do something about it. Now, I will just try to give you some notions for you as students who you may become policymakers in the future. Know everything about everything, and realize if you ever get in a position of influence, you actually have to write everything down, put it on the web, so that if people actually disagree with you, that you've at least been transparent in that process. And bottom line, it's a lot better in terms of a discourse to be persuasive than raise panic. Thanks.
Excellent. Persuasion over panic. Okay, and finally, I'd like to introduce Chris Elder. Chris is an energy analyst and consultant who has written about energy and investing for more than a decade. He's the author of Profit from the Peak and co-author of Investing in Renewable Energy.
I'd just like to offer a few remarks based on my sort of global perspective on the global energy situation as to what I think the trends are. Fossil fuels have been by far responsible for most human energy for the past 150 years, but I think that period is now coming to an end. Renewable energy is clearly the future, and if you look at the trends and the various factors that are affecting them, there's really no reason to think that these progressions, the decline of fossil fuels, the rise of renewables, can ever be reversed. The decline of oil prices, for example, over the past 9 months has been responsible for about $100 billion in reduced capital expenditure just in the oil sector. What this means is that future supply of oil is no longer going to be as assured as it once was. Once we get through the current glut, we're going to find ourselves lacking enough oil to meet demand if demand continues to hold steady. And I think that will produce another price spike a few years in the future. In natural gas, we have quite a glut worldwide. It makes it very difficult for investors because the price is so low. So since this is a panel about investing, I'd just like to point out that investment in oil is dropping very rapidly. Investment in gas is very difficult because investors can't make a profit with the prices the way they are. And even the prospect for exports of LNG with the glut of natural gas in the United States, I think are in jeopardy now because the price in Asia is too low for exporters to really make much money. Coal is declining worldwide. There is still a robust use of coal, but most of that growth in coal demand worldwide has been powered by China and India. And those trends are now starting to flatten, and in fact in China may even begin to fall. Meanwhile, the biggest coal producers are losing a lot of money. The biggest coal names I follow on the US Stock Exchange, the London Stock Exchange, they've lost about 95% of their share value in the last several years. And that sector is definitely in decline. And it's interesting to note that this is happening without there being any sort of binding climate policy worldwide. The decline of coal has been driven by a very modest set of incentives in various countries, particularly in the OECD. If you look at renewables, you see double-digit growth rates for several years in a row, and no indication that that's going to calm down. It's growing very rapidly. Global investment in renewables is about $300 billion a year, has been steady at that level, but the amount of actual renewable energy being deployed is continuing to grow because for the same money, they're actually getting more production. And this is causing havoc in the utility sector. CEO David Crane of the large U.S. utility NRG has called the current design of the grid shockingly stupid. He says it was designed for a previous era that no longer exists, and that everything needs to move away from the centralized hub and spoke design of the utility industry to a distributed model, and I think that's correct. So when you look around the world, you have to ask yourself, is there any reason to think that oil is going to become cheap again? Or that it's going to start producing such returns that investors are interested in it again? I think the answer is no. Shale gas, we'll see. But right now it's only really happening in the United States, and in fact the last big oil US major that was trying to prospect for gas in Poland has just pulled out. They can't find prospect gas after spending $200 million or so trying to find it. Coal is declining, I think, for a number of reasons, mainly market forces. And nuclear, in fact, is declining. So the future belongs to renewables. That's my story, and I'm sticking to it.
Great. Well, thank you all. I think you can all see that we have a pretty interesting mix of panelists here on stage, so I'm looking forward to a great discussion. Just to give you a little rundown of how this will go, I have a few questions that I'll take the moderator's privilege to ask first. And then I will be switching back and forth between questions on Pigeonhole and students coming up to the mic. So if you would like to ask a question at the mic, I ask that you line up behind them. And then on Pigeonhole, once again, it's pigeonhole.ad, and it's all capitals ISES 2015 if you would like to ask a question. Great, so without further ado, let's get started. So my first question is really about where we see renewables taking off and where we don't. So in some countries, it seems like you hear, in the United States, a new solar panel goes up every 4 minutes. Whereas in other countries, they're really struggling to deploy any renewables at all. Is this a matter of investment, or is this a matter of the policy landscape that governments are putting out for renewable energy development? Who'd like to go first?
Well, if you just like, and here's my observation. Locally, all forms of energy that are deployed are really a matter of two things: comparative advantage and market intervention. And the market intervention is largely steeped in community expectations. So where countries have actually installed renewable energy targets, where countries have mandated minimum standards, that stuff happens. We don't underpin a higher price than other costs of energy. You're going to impede the take-up. And But where you've got, Iceland, which is blessed with sitting on the Rec Cheney's rich for geothermal and having a fair amount of hydro, that's a comparative advantage that just won't quit. And so it is actually a matter of what's local does work.
Thank you, Barry.
Yeah, well, I mean, we are active in a number of countries here in Asia, South Asia, and countries that are moving fast is where government really push a motivation towards increasing renewable energy. For example, in Indonesia, I mean, we are sitting on 50 to 100 gigawatt of renewable energy potential, and to be honest, not much is being done. If you look at countries like Thailand or Pakistan, lots more renewable energy is being put in place. So I think it's government that's sort of driving or hindering the growth in renewables.
My observation, the regulatory framework is one of the considerations that will be calculated by investors. So when they make investment, they have to be able to predict and forecast the framework. So, for instance, government incentive for renewable energy is playing significant role for investors in making decisions, and also legal environment, and also social conditions of the society also. So a lot of consideration in terms of risk for investment. So maybe it's one of the reasons why development of renewable energy in developing countries is slower than, let's say, as or other developed countries.
Investors are risk averse. They like certainty, and they like knowing roughly what their returns are going to be. So renewables have had the most growth where they have that kind of certainty. In the United States, we have a variety of regimes, renewable fuel standards, net metering policies, that kind of thing. In Germany, of course, you have a very popular feed-in tariff, as well as in Japan. It's no surprise then that the countries that have these kinds of structures, feed-in tariffs, renewable portfolio standards, that's where the majority of stuff is getting built. And that's where you're able to do the larger projects because of that certainty. In the developing world, there's a crying need for renewables. But most of the projects are really too small to interest the big money. Large investors, infrastructure funds, pension funds, that kind of thing, it's just not worth it to them to invest in anything that's less than, say, $200 million. So for small projects, which is really what most of the developing world needs, especially for off-grid projects, you have to be more creative about rounding up capital and creating the kind of certainty that's going to interest investors. So I think to the extent that the developing world wants to build large-scale, utility-scale renewable projects, they first must have the kind of certainty that investors are looking for. They have to put in place incentives, programs, or at least compensation programs, even if it's just on a merchant generator basis, like a feed-in tariff or something of this kind, that create that kind of certainty such that the investors know that, as soon as they start drinking from the punch bowl, it is going to be pulled away. So I think it's really important for the developing world to create those kinds of standards and develop that kind of certainty to be able to de-risk projects in a very standardized way. And I think, by the way, climate bonds is a really terrific way to do that. $36 billion in climate bonds issued last year, not all of it in renewable energy, but it indicates that the investor community, especially large funds, are becoming very comfortable with this kind of structure as a way of indicating that a project is good and that it can be de-risked and that the returns are going to be there.
Just to add to that point, and I agree with all that, for the longest time, when you have a lot of little projects that need capital, being able to aggregate those projects to create a larger portfolio and something with like a climate bond, that could be one of the future answers. How you overcome the issue, how you get the money to fund these things.
In fact, in the U.S., one of the sort of big innovations, I guess, in terms of financing solar is this new group of what they call yieldcos that have been launched by some of the big solar companies like SunEdison, Solar City. Essentially what they're doing is aggregating hundreds or even thousands of rooftop solar systems that would be too small to attract investor interest, and essentially turn them into something similar to mortgage-backed securities, although I sort of hate to even invoke that word at this point, in order to create a vehicle that's investable for large funds.
Excellent. So you all jumped into one of my next questions. We'll just elaborate on that a little bit. It seems to be that renewable energy specifically is becoming very popular. It's in the media all of the time. Countries are constantly hitting different targets. And people do want to be involved with their dollars in these projects. So you just mentioned yield codes, Chris. What are kind of the most practical ways you see coming about for individuals to invest in renewables? We have yield codes. What about crowdsourcing of financing? What types of things are you actually seeing taking off and making a difference in terms of getting projects off the ground?
Could I just offer, I'm going to go right along the same line of aggregating supply or aggregating demand to create a larger investment, which then, and you only get into the aggregation if you meet certain criteria. I'm going to go back to one of the themes that the person from the IMF spoke about, energy efficiency. So Adelaide is the city I live in. It wants to be carbon neutral by a certain point in time. The race is on. Evidently, there's one city in the world that says they're going to be carbon neutral by 2020, and I think we're actually posing 2019 as our target. And in trying to come up with some policy that meet everybody's expectations and also the commercial energy efficiency, when you're talking about double glazing windows, when you're talking about insulating buildings, that all creates local jobs. Also, you can go with Treasury in government and say, you know that your hospitals, your schools, your public buildings, you're going to pay power bills whether you like it or not, and your trajectory may be that they're going up based on all things considered. If you could aggregate all of government's demands and then invite in some of the larger tenancies to join in that, you can citywide actually create jobs, reduce power demand, and actually have a grand bargain.
Right. So could somebody give us maybe a quick answer on if crowdfunding and kind of yield code, these smaller investment ideas, are actually turning into, or have the potential to turn into, real concrete financing for either bigger projects or smaller systems?
Well, I would say that crowdfunding is a terrific way to fund small projects. Where it's really working in the United States is, let's say you've got a housing development or an apartment building even, or some sort of small community where perhaps they don't have the right place to put rooftop solar on all of their buildings, but they can get access to a local farm where they could put up, say, a 500 kilowatt system or even a 1 megawatt system. Too small to interest the investor community, but just enough to power themselves and enough that they self-fund it. So I think crowdfunding is a terrific way to do that. There's another outfit in the Bay Area where I live near San Francisco called Solar Mosaic. It's doing something similar for just one project at a time. If there's a community center or a theater or another building where they would like to have solar, but they can't afford to self-fund it. So what Solar Mosaic does is it sells shares in the project, and anyone can invest in these projects for as little as $20. That's a terrific model to deploy solar, especially rooftop solar, on sort of one project at a time, residential, small commercial scale. But is that enough to really move the needle in terms of the total picture of renewable energy supply? I don't think so. But that's not really important, especially in the developing world. In the developing world, I think the Solar Mosaic model is terrific, where you could have in pretty much any community in the world if you could structure it so that people could put in $10 or $20 and buy shares in a project and get them built and then have those guaranteed returns, even if it's just 6% per year, it doesn't really matter because they're not in it for a big return. They're in it for developing more capacity. And so I think crowdfunding works great there. The solar yield codes are really a very different animal where you're actually trying to attract the interest of large investors that want to deploy hundreds of millions of dollars of capital at a time. And that can only really be done through a large solar developer like SunEdison or Solar City in the United States, where they have a large portfolio of projects.
Excellent. Did you want to follow up on that?
Yeah, I think that, we see a lot of the yield codes buying assets in the world. I think it's an understanding that yield codes don't drive growth in renewable energy capacity. Yield codes buy assets that have been operational for 1-2 years, which have been de-risked. It's more the developers, the development institutes like World Bank, IFC, ADB, who drive renewable energy growth in these kind of markets. Yield codes are normally the ones that come in and say, okay, nice project, been running 2 years, good return, let's put it into a lower yielding vehicle and make some money out of it.
Excellent. So these are all very interesting ways to think about investment. One other question that often comes up is governments or different agencies will say that renewable energy is tougher or riskier. What is it about renewable energy investment that's so different from how traditional fossil fuel investment has taken place up till now?
Well, in terms of fundamentals, it shouldn't be different at all. There needs to have a payout. It needs to have a rate of return. It needs to provide electrons to go down a wire. And an awful lot of the technology differences, such as intermittency, are things that will get ironed out through performance measures like having better storage, smarter grids. So I don't actually think that the differences between renewable or low emissions technologies and traditional fossil fuels are what matters. Forgive me, I think what really matters, and I think the point was made before, is cost. At some point in time, we want low emissions energy supplies to not need subsidy in markets and to actually be able to compete head to head with other energy supplies, because that's the secure, safe, and competitively priced outcome that we want. And I actually sense that there's a fair amount of distraction in debating communities about wanting renewable energy, when I think what's really wanted is safe, healthy, secure, competitively priced energy. And if one or another technology becomes all of those things all in once, I think it'll actually be adopted fairly fast.
Interesting.
I think it's indeed the big risk was always cost. Renewables until a few years ago was always double what a coal or gas-fired power plant would be to invest. And what we have seen in the last, especially in solar, last 2 years, the price for solar cost to install has been coming down significantly. In India, we're talking about $0.8 billion per megawatt installed, which is similar to a coal-fired power plant. In Dubai, the last tender that was done at 5.9 cents kilowatt hour for 20 years PPA, which is lower than the average price for coal-fired power plant production.
Well, I think it's sort of strange to think of renewables as being more risky at this point. I mean, perhaps at some point in the past that was the case, but it clearly is no longer the case. If you are developing a renewable project, wind or solar, certainly anywhere in the OECD where you've got a well-established compensation structure and a well-established method of de-risking the projects, the return's virtually guaranteed, and the risk could hardly be any lower. Whereas if you're investing money in fossil fuels right now, you're really taking some risk. You're not only taking price risk, you're taking climate change risk. You're taking the risk of stranded assets. You're taking all kinds of uncertainty on board. And if you're in private equity or your hedge fund or something of that kind and you're looking for double-digit returns, maybe it's worth it to you to take that risk. But if you're a pension fund or an infrastructure fund and you're looking for low-risk, dependable returns over a long horizon, if you'd like the idea of investing money for 20 or 30-year lockup and getting a 6% return on that, then you have to be looking at renewables. You're not going to be looking at fossil fuels for that. I think really the notion that renewables were risky is sort of rooted in the past. It's not appropriate anymore, and it largely reflects the fact that big banks really sort of lacked the literacy in renewables. But I think that's changed now.
Well, for example, in Indonesia, dominantly relies on fossil energy. This needs a big movement from the government. Also, the government try to encourage private sectors to work together to enhance the role of renewable energy, as sometimes renewable energy potentials in Indonesia are very scattered and located in remote areas, and those are reasons why the government also needs a partnership with the private sector. So, for instance, in Indonesia, renewable energy is now getting more popular than the fossil one.
Excellent. So I believe we'll actually move on. Just one last question for me, and then we'll be starting the questions with the mic and with Pigeonhole. So Barry, you touched on this a little bit already, but it used to be, I remember a time, maybe, 10 years ago when I first heard about, the fossil fuel peak, and we were going to run out of fossil fuels within the next certain time frame. Clearly, that's no longer the case. Many people say that really the danger is that we have a dangerous wealth or supply of fossil fuels rather than a dangerous shortage of fossil fuels. So I think that this is kind of the new debate. But with the shale gas revolution, and like many of you touched on, the prices of gas and oil being so volatile, how do you think that impacts different types of renewable energy investment or energy investment in general? How is that changing the game?
I'll provide you some context first, and it was actually Yamani, who was head of OPEC, who quite wisely said some decades ago that we will not run out of oil, we will run out of economic oil at a juncture. That's true, that's definitely true. The current drop in the price of oil to, it's currently $65 for Brent today. That only pushes out about 40% of the shale gas projects in the U.S. The median break-even price for shale gas in the U.S. is about $45 a barrel oil equivalent. Please appreciate, shale is the most common sedimentary rock in the world. Please appreciate that all of the oil and gas basins that have produced what they have produced to date have shales. Please appreciate that there are basins in the world that didn't have conventional structures or didn't have conventional reservoirs, but they actually have the right kind of shales to produce. And it's not every single basin, as pointed out. We're now in the Bakken and certain other places in the U.S., which is the liquids-rich shale, which is relatively inexpensive to extract. And one of the points that you should realize is that naphtha or condensate is actually dissolved in the gas in the ground, and when it gets to surface, it's oil. And you basically have got methane, ethane, propane, butane, the LPGs, you've got condensate or naphtha, which is basically virtually diesel with a little bit of refining, that you get from unconventional reservoirs. It is centuries at current demand that's already been determined to be technically recoverable, And don't ever get confused technically recoverable with economic. We've got no idea. It's way too early, but certainly Argentina, the No-Cam Basin, the Vaca Muerta, it is a country that just finished expropriating the oil and gas majors, and they're now back in because of the prospectivity of that particular formation. Yeah, people pulled out of Poland, people pulled out of a lot of basins. It takes about $1 billion to actually determine whether or not you have something in terms of a sweet spot for an oil and gas play in a shale basin. And forgive me, 200 million don't do it. That was early judgment by some companies based on the price of oil falling. So just please know that we can demonize things, but we can't change the reality of them. And the reality is that we probably have natural gas and gas liquids sufficient to provide a large amount of energy markets for centuries. But who knows if, in fact, the cost of renewables come down sufficiently, it may be out of market just on economics.
I appreciate Barry's comments there. As some of you may know, I've written a book about peak oil, this concept that many people have incorrectly referred to as run out of oil. No one who really understands peak oil would ever say that. The peak concept is simply that at some point you reach a maximum rate extraction, and usually that's when you're about halfway through, not when you're running out. There will still be oil and gas left at the end of the century. Whether or not we'll actually be producing it at an acceptable price is really a question. So Barry is absolutely right about that. You may have heard this notion that we have 100 years of shale gas in the United States. Okay, that's technically recoverable, and it includes a lot of categories like probable, possible, speculative, hallucinated reserves. In reality, we've got about 12 or 13 years of actual proved reserves on the books in the United States. And that's what's considered economically recoverable, and that number changes every year. So with the oil price crash that we've seen in the last 9 months, there's going to be an actual decline in proved reserves in the United States, both of gas and of oil, when those producers have to report their new numbers to the EIA, because the baseline of price has shifted downward, making some of the previously recoverable estimates no longer recoverable under current price conditions. So there's no question that the resource is there. The question is, can you produce it at an acceptable price, and what rate? And then how is that going to compare to the cost of renewables? So look at what's happened just in the last couple of years in the United States. In 2012, the EIA estimated that the number of coal plants that would be retired over the coming years was twice what they estimated just a few years before, okay? We've got nuclear plants that everyone thought was going to be around for decades that are now being shut down because they've been undercut by the price of shale gas in some places and cost of wind and solar in other places. So the resource is definitely there in terms of oil and gas and coal. We're certainly not going to be running out of it, but we may have already reached the peak in production in oil. The EIA just yesterday, I believe, put out a new forecast saying that it thinks essentially that U.S. oil production will reach its final peak this year because the price of oil has fallen so far that it's not going to be able to create the kind of growth curve that was necessary to compensate for the rapid decline rates of the existing shale wells, which declined at 65% the first year, 35% the year after that, and so on. So I think that over time, if you consider the fact that the cost of solar alone has dropped about 2/3 since 2010. Since 2000. We're looking at a future in which shale gas will be able to continue to compete against other fossil fuels. It may actually not be able to compete against solar and wind at some point in the future. Right now, there's sort of parity. And eventually, we're going to find, if you look at several decades, that I think renewables are going to undercut all of the above and make it very difficult to continue with significant growth, if not just plain flat production of oil and gas.
Excellent. Did anyone else want to speak to this before we move on to questions from students?
Yeah, maybe I think when oil was at 100, 110, what he said is never going to go back 50. Renewables kept continuing to grow. Now we are at 60. I think China is putting more renewable energy in there than the traditional energy capacity. So I think that growth in renewable energy is independent from what's happened on the oil and gas side.
Can I just offer one other comment? And this is a shared investment risk that all energy projects have, whether it's fossil or renewable. In first world economies, where people can afford to value aesthetics and amenities, NIMBYism, or not in my backyard issues, will arise, and don't think that they won't. The footprint of solar thermal fields, the footprint of wind farms, you will find, just like any other industrial project, they will be running into the same fine if it's over there, nowhere near me attitudes. And so those of you who are going to be working in the renewable energy or the fossil fuel industry or as policymakers need to recognize that one of your real tasks to de-risk industrial scale energy projects is to get to communities before problems or potential problems are personal. To get communities before it's a knock at the door about a particular time and in a particular location, and talk to people about the issues that will arise in a genuine way before the hair on the back of the neck is standing up, and have an open dialogue which is more about persuasion than panic. And I'll just offer you that as a tip. I have only learned that over the decade in dealing with engagements with communities, is that you're so much better off having an academic discussion about things in principle 3-4 years before you're actually wanting to go ahead and have a bulldozer on the ground than knocking on a door a week before.
Excellent. Okay, so here's the part we've all been waiting for. All of you get to ask some questions now of the panelists. I have some excellent questions I'm looking at here on Pigeonhole. And I'll remind you that if you would like to ask a question at the mic, please stand up and line up behind the mic. Okay? So our first question from Pigeonhole is a very student energy-esque question from budding energy industry professionals themselves. Can you give us advice in how to create a startup based in renewable energies and sustainability? This is the question for any of you, or all of you. Yeah. How to create a startup in renewable energy and or sustainability.
I will just offer you one model that I've heard about from geothermal heat pumps. Evidently, when you're digging a trench for fiber optic cable, you're also digging a trench for the pipe works that you need for ground source heat pumps. So if you could find locations where they're doing some development, where they're trenching for optic fiber, and that people haven't actually thought about deploying ground source heat pumps, you might actually get digging for free. And you might be able to aggregate demand within the community that they're connecting with the fiber optic cable. And so look for opportunities where you can be a free rider.
Maybe maybe if I was, if I have to start over again, I think I would go to markets where the amount of renewable energy is still very limited. Countries like, and those are the new frontiers. So you would go to countries like Indonesia, Kazakhstan. They're starting to build the first wind farm. Those are markets, I think, where as a starting entrepreneur you can still make a lot of value. In addition, I think you should look at new technologies. Offshore wind is coming up. I mean, the amount of offshore wind that they are planning to install in Europe is just a start. I mean, you will see people coming and setting up offshore wind farms here in South Asia, in Japan, in India. I think it's a market that will be booming for the next couple of years.
I think a startup made up from friends, from collecting ideas and getting and brainstorming ideas, and from that, usually they go with how to make the feasibility study. Once they make a feasibility study, then they can plan about how to finance project. And I think, as Edgar in the financial industry, there are a lot of ways to get financing for creative and genuine ideas about technology, I think. So maybe for startup, sometimes you don't have to worry first about finance, but just
share their net yet. More than half of all renewable prices. And
drop in demand in China. By giving them a rebate on diesel, if you want to actually simultaneously create a level playing field for different forms of energy. And that's why I go back to the bit about please try persuasion, panic, because getting the will actually come with an economic bill for the states and that in pace, quantity, which makes them less competitive in trade. And so you may win on one count and lose on three others in terms of those things which you want: safe, secure, competitively priced energy. So off early by saying no everything about it. Please consider the perverse outcomes you can get by trying to panicking people into a particular position as opposed to persuading them on the basis of economics and scientific evidence.
I want to say one short thing. I think that persuasion and trying to get those subsidies away, it's a very hard thing to do. I think sometimes a crisis is better. For example, the nuclear crisis in Japan, how disastrous that was. It actually increased renewable energy in Japan a lot. Same in Indonesia. In Indonesia, renewables, the growth is very limited, very small. If you start getting blackouts in Indonesia, they will start looking more seriously at renewables.
Okay, great. Thank you for that excellent question. So our next question from Pigeonhole is about countries that come together to pool their resources. So this question says it requires
take some grand bargains to de-risk reductions in renewables. There's got to be something to recognize how we protect various countries' economies at the same time we protect the environment. Now, I certainly don't have magic pudding for that, but I can say that finding a global solution will start out by the local impacts.
I think tax or cooperate on something like that, or even to cooperate on renewable energy development. You have to recognize that any time you propose any sort of change, there's going to be winners, there's going to be losers. And so it's really strictly a matter of political will, in my opinion. There will be people that win, and there will be people that lose. And it's really a question of, who are the specific people at risk of stranded assets, for example? Who are the people that stand to win? And it's really almost always just basically a political question.
I think that cooperation between countries is not really necessary. I mean, look at China and India, which have been opposing the global climate change deal. They have been putting more renewable energy into their own markets than anybody else. So I think cooperation is nice, but I think it's the individual countries that need to do their own measures.
Excellent. So next question from the mic, please.
All right. Thank you very much, panelists, for a very intriguing discussion so far. So earlier we talked about de-risking investments in renewable energy and clean tech. And we also kind of talked about local impact and so on of investments. And so I was just wondering, would you still consider renewable energy investments a risk in oil-rich economies such as the UAE and Alberta, for example? And if so, what measures can be taken by various stakeholders to changing that degree of perceived risk?
Well, I can't imagine that there are any jurisdictions in the world anymore that think that renewables aren't here to stay. I guess, as was just posed a moment ago, if in fact policies are going to cause very well-established industries to walk out the door backwards sooner rather than later, and if that is thousands of jobs and X amount into royalties and that build hospitals and schools in local economies, those are the issues that you've got to consider in the grand bargain. Who's going, how do you actually supplant that in your economy? So again, I don't have any magic pudding whatsoever, but I just don't know of a jurisdiction in the world, at least that I've come in contact, that doesn't actually want to try to have everything all at once.
Yeah, it's all about money, isn't it? It's always all about the money. So when you think about a place like I can tell from your accent you're Canadian. My parents are Canadian too, so that's. Um, I mean, just look at the that we've just had in Alberta. Absolutely remarkable. No one thought it was going to happen. All of a sudden, the oil and gas industry that had been sort of running roughshod over everything is now playing defense there. It's really incredible. If the new Alberta government, for example, is able to structure its incentives and its taxation regime and so on, such that renewables have a chance to compete, and generate jobs, and bring in revenue, guess what? All the people who benefit from those jobs, all people who capture a slice of that revenue are going to be in favor of it. Just the same way that they were in favor of the tar sands development. Show them the money, and they'll get on board. The same thing is true, by the way, in the United States. You know, everybody thinks about this long time sort of split between the Democratic and the Republican parties in the United States. Being, you know, you got tree-hugging liberals over here who are in favor of renewable energy, and you got your oil and gas toadies over here that are in favor. You know, it's not really about that. It's about who has the money. The red states, where the Republicans live, they produce oil and gas. But to the extent that renewable energy is now gaining footholds in those areas, in the states, all of a sudden, political alliances are changing. You know, if you're not aware of it and you're interested in this subject, look up the Green Tea Party in the United States. Down there in the south of all places, in Georgia, you've got an activist named Debbie Dooley, who is getting all sorts of Republicans on board with building solar power. And it's really creating a whole new political dynamic around the political alliance of energy. Why? Because it gives them access to a piece of the pie. It's all about the revenue.
Great, thank you very much.
Mr. Alexander, did you have a comment?
I think for oil-rich country, they have the luxury to make economic decision for investment and how they want to aid the multiplier effects. But for countries who have limited fossil energy resources, it seems that the renewable energy sources is the only way for them to be sustainable.
Excellent. So we'll go to our next question here from Pigeonhole. So you mentioned during the panel that the time of investment in oil and gas is coming to an end. So this is kind of a similar question here. How do you read oil and gas majors acquiring companies for billions of dollars? Think Shell acquiring British Gas, for instance.
Okay, consolidation is inevitable. It happens all the time in industries, not just oil and gas, where some companies have overstretched their finances and restructuring finances turns out to be a more commercial proposition. Guess what? One company gets taken over by another. Some of them are friendly mergers. One of the factors you'll have to take into account, oil and gas companies survive because they replenish more than they produce each year in terms of new booked reserves. And right now, companies are challenged to replenish what they produced because the prices come down, and SEC 10 in the States require companies to write down reserves which aren't commercial in the year of the current prices of the current technologies. The upshot is whenever there's a price decline, those who are fairly fat and happy can look at distressed companies and take them over. This is not unusual. This is not part of today's cycle. This is just normal. And but I just find it curious that 1906, when the Peugeot Commission busted up Standard Oil, which was Standard New York, which is Standard New Jersey, which is SO, Standard in New York, which was Mobil, Standard of Indiana, which is Emeco, Standard California, which is Chevron, Standard of Texas, which is Texaco. So many of those companies are now merged. Chevron bought Texaco, Exxon bought Mobil, you know, but the largest oil companies in the world are the NOCs, the national oil companies. You know, if you took a look at who has the main production, it isn't Exxon or Chevron anymore. It's Aramco and companies like that. So you have to also remember that what's going on in the market is actually almost smaller end of town now.
I mean, the cycle of sort of expanding players at the independent level, smaller exploration and production companies suddenly appearing, and then a wave of mergers and acquisitions. This is just the history of the oil business. It's always been like this. And after this massive expansion over the last 5 years of small independent producers going after shale in the United States, and then the price crash, it was absolutely inevitable that there would be another wave of M&A going on.
Okay, excellent. So we'll go to our next question from the mic here.
Hello. We are talking here about the implementation of renewable energy technologies. I would like to know if there are any possible risks from such implementation.
So would anyone like to give just a quick answer to that question?
So for example, any hot rock geothermal, which was meant to be a potential low emissions renewable energy source, because you have to frac stimulate rocks, induced seismicity was a risk that you actually have to deal with from that. I've just read something in the paper yesterday about wind farms and the low frequency waves that are created nearby to people. What it breaks down to is that we're still sort of early days in understanding the risks, the risk mitigation, and what's publicly acceptable on certain aspects of some renewable energy. But I'll just go back. Energy efficiency is always no regrets.
Excellent.
It really depends on what kind of technology you choose. If you go for biomass or something, wave energy is more risky because it's not proven. If you go for wind, more than 400 plus gigawatt in the world installed. I mean, it's probably one of the lowest risks you can have.
Thank you.
Excellent. So I'm just going to do this one last question from Pigeonhole so that after this we'll have more time for questions from the mic. Okay. Is carbon trading really effective in the decarbonization process with regards to energy production? So the buying of carbon credits and things like that is what we're getting at here.
I don't think so. As again, China is opposing a global pricing on carbon. They actually have been able to achieve a reduction in emissions and actually are probably on the forefront of reducing carbon in the world. And they continue to tell the world we don't want to have a carbon price. And I think that I agree with that.
I mean, I think if you look globally at the history of emission trading over the last 10 years or so, it's clear that whole structure has made more money for the banks and the traders than it has for actual people deploying renewable energy, and that it really hasn't been effective in terms of producing results. I'm going to refer back to something I think it was Josh Brown said a while ago, that carbon pricing or dealing with climate change from a market perspective isn't a question of technology and it isn't a question of policy, it's a question of market share. Again, where you stand depends on where you sit. If you're in the position where you're sitting on potentially stranded assets, you're going to do everything you can to protect them, including manipulating the carbon markets. If you look at what's happened in the EU carbon emissions trading system, it's been fundamentally broken for years. I mean, prices crashed to whatever it is, $7 a ton or something now. It doesn't accomplish anything. California, much to my dismay, has launched its own carbon emissions trading program. So far, it actually seems to be working a little better. It was structured better than the EU system was. In fact, I was kind of shocked the other day when I opened my power bill and saw a $24 credit last month. I was like, well, where did this come from? It was the California payout for the emissions trading system that came back to consumers. So maybe that'll stick. But if you look a little more closely at what the carbon price needs to be to actually achieve something, I think the EPA's social cost of carbon schedule in the United States is a good start. Where you're starting at around $40 a ton for carbon emissions and escalating up under a 3% discount rate. But if you look at some of the other new research, including the research out of Stanford, they're saying, no, really the solar cost of carbon is $220 a ton. Well, there's a bit of a difference between 220 and 40. So when you're setting out to create a system that actually prices in carbon, and I'm generally in favor of that, it's really hard to get the price right. And if you create a market around that, as the EU did, it's hard to keep the price from falling to the point where it's ineffectual. So I think it's a tough approach, generally speaking.
Yeah, that's one of those perverse outcomes again. In wanting to be technology neutral, but wanting supply demand to bring the cost of carbon mitigation down, you strand new technologies that haven't been able to come down their cost curves. And so you actually don't end up promoting a portfolio. And in order to actually promote a portfolio of all these different renewable technologies, you actually have to quote unquote pick winners that you're going to give a separate little bit to. It's just very fraught.
All right, time has gotten away from us a little bit here, so we're actually going to be moving on to our last question. Over here from the mic.
Hi, I just have a specific question for Mr. Chris Nelder. You've mentioned that renewables are the future. So my question is, how can renewables compete with jobs and opportunities that non-renewables, such as oil and gas production, can provide?
Well, it's totally dependent, of course, on where you're speaking of. Okay, so if you're in a place that's totally dependent on oil and gas revenue, you're going to have to start at a very fundamental sort of policy level or political level to create the market structures that enable renewables to compete, and then the investment will come in, and then the jobs come in. If you're in a place where you're a net oil importer to a large extent, you're going to have a much easier time of creating renewable jobs than if you're a major net oil exporter. So I think, it's kind of hard to answer that question generally because the answer is so different from every single place that you would ask that question. But I would say in general it really starts with policy as well as, appropriate pricing. I don't know if that answers your question, but.
Excellent. Well, thank you all for being here on this panel. This was incredibly interesting to have such an in-depth dive into all the different facets of energy investment. I know that there are still a lot of outstanding questions. This is a really large topic, but I'm sure that we can answer more of them as the summit goes on.
Yeah, come talk to me if you got a question. Happy to.
And I think just in close, we've heard a lot about different prices and different mechanisms that are important for energy investment. There's a lot of still uncertainty around the cost curves that are coming down and ones that keep fluctuating, and different types of investment risk, if you're talking about the differences in investing in renewables to the riskiness of fossil fuels at this point. So thank you all very much for being on this panel. Can we give them a round of applause? And I believe we just have a few quick thank you gifts for the speakers here from the delegate team. Photo of all of you before you head off stage. Can we just get everybody in a photo before they head off stage? All right. Anyways, I hope hope you all enjoyed this panel as much as I did. I think it was excellent. So now we're just going to be heading off to lunch. But before we do, I just have a quick announcement. If you would like to drink any beverages other than water at the gala dinner this evening, you will need to make sure to purchase drink tickets in the hallway before you head up to lunch. Okay? And then other than that, just keep reading, and we'll see you at the rest of the conference. Enjoy.